Gentlemen, good day and welcome to the H1 FY26 earnings conference call of Vaidya Sane Ayurved Laboratories Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. I would now like to hand over the conference to Dr. Rohit Madhav Sane, Chairman and Managing Director from Vaidya Sane Ayurved Laboratories Limited. Thank you and over to you, sir.
Okay. Thank you, Ashi. Good afternoon, everyone, and thank you for joining the Vaidya Sane Ayurved Laboratories Limited earnings call to discuss our performance for the first half of FY 25-26. I would like to begin by expressing my gratitude to you all for taking the time to join us today. I have with me on call Dr. Vidyut Bipin Ghag, the whole-time director, Mr. Narendra Pawar, our Chief Financial Officer, and Adfactors PR, our Investors Relations team. We have shared our results update presentation. I hope you all must have received it. We appreciate your interest in our company and are excited to share our business updates, financial performance, and strategic outlook. So a bit talking about our company, Vaidya Sane Ayurved Laboratories. Vaidya Sane Ayurved Laboratories operates under the well-recognized brand name of Madhav Bagh, a pioneering healthcare institution that seamlessly integrates the principles of traditional Ayurvedic medicine with modern diagnostic methodologies. Madhav Bagh was founded in 2006 with a single vision to make disease reversal a scientific, accessible, and trusted part of India's healthcare system through Ayurveda. Nearly 2 decades later, that mission continues to guide us. Today, we operate a nationwide network of more than 320 clinics and 4 hospitals across 8 states and union territories, treating over 10 lakh patients suffering from chronic non-communicable diseases such as cardiac ailments, diabetes, hypertension, thyroid, and obesity. Our hybrid model integrates modern diagnostics like 2D echo, CT angiography, stress tests, cardiac output monitoring, along with various Ayurvedic Panchakarma therapies, diet programs, and herbal medicines. We also leverage technology through our MI Beat Pulse app, which now serves more than 2.5 lakh patients for digital monitoring and follow-ups. Our research-driven approach has resulted more than 150 research papers, scientific research papers, published in reputed national and international journals such as Lancet, Indian Heart Journal, and that itself validates the clinical efficacy of our protocols. As on September 30th, 2025, the company operates about 320 clinics across Maharashtra, Madhya Pradesh, Uttar Pradesh, Gujarat, Goa, Karnataka, Delhi, and Chhattisgarh. Out of these, about 22 are company-owned and 45 are about OPD clinics and mini clinics, while 255 are franchise clinics. We also operate 4 cardiac prevention and rehabilitation hospitals, one at Khopoli, second at Nagpur, third at Vizag, Visakhapatnam, and the 4th at Gujarat, Vadodara, supported by a team of more than 450 Ayurvedic physicians. So we are empaneled with more than 9 TPAs and 12 insurance companies to offer cashless facility at our Khopoli as well as our Nagpur hospital, and the other 2 hospitals also are slowly and gradually getting up with these kind of TPA and insurance company tie-ups. We remain one of the few Ayurvedic institutions in India with NABH accredited facilities, including our flagship Khopoli Hospital, which continues to be the benchmark in heart disease reversal. So coming to our operational and strategic highlights. Year FY25 was the year of consolidation and strengthening our foundation. During the first half of FY26, we have seen steady improvement in patient inflows, operational efficiency, and profitability. Our enterprise continues to grow on two key pillars, clinics and hospitals. Clinics continue to be the backbone of our business. They operate under a dual structure, company-owned and franchise models, allowing us to scale with minimal capital expenditure. Our franchise network has performed well, maintaining 80 to 85% patient retention and a documented 65% disease reversal rate in total. We plan to add 40 to 50 new clinics this year and another about 70 to 80 clinics in the next year, strengthening our presence in Tier 2 and Tier 3 cities through Ayurvedic doctors as partners. Hospitals form the next growth engine. We currently have about 110 beds across Khopoli, Nagpur, Vadodara and Visakhapatnam. The ongoing expansion at Khopoli and Nagpur will take capacity to 250 to 300 beds over the next 12 to 15 months. And we are targeting about 1,000 beds nationwide in the next coming 2 to 3 years. The recently opened Vadodara Hospital has ramped up strongly with 25 to 30 admissions per month and is planned to expand to about 100 beds in the coming year. Our fundraise through convertible warrants is earmarked primarily for the hospital expansion. Approximately 25 crore of the capex will be deployed across Khopoli and Nagpur facilities, combining owned and rental as well as PPP models for efficient asset utilization. I am pleased to share that we have taken an important step in our international expansion journey. The board has approved the signing of Memorandum of Understanding with Maxura Healthcare, which is in Malaysia, to jointly establish and manage an Ayurvedic therapy center in Malaysia under the brand Maxura Ayurveda Healthcare. This collaboration marks our first overseas venture and reflects growing global recognition of Madhavbag's clinical expertise and holistic healthcare model. Under this agreement, profits at the end of each financial year will be shared in a 70-30 ratio between Maxura Healthcare and Madhavbag, respectively. This partnership not only enables us to take authentic Ayurvedic therapies to international markets, but also strengthens our strategic goal of making Madhavbag a global name in integrative and preventive healthcare. I would also like to inform all our shareholders that the board has approved the shifting of our corporate office from Bhumi Velocity Wagle Estate, which was in Thane West, to Mahavir Business Park at Teenhas Naka in Thane West itself, with effect from 24th September 2025. This relocation will provide us with a larger and more efficient workspace to support our growing team and expanding operations. Accordingly, all books of account and statutory records of the company will henceforth be maintained at the new address. In addition, the board has also approved two important business proposals that further strengthen our healthcare delivery network. The first relates to the capacity expansion at our Nagpur hospital, where we'll be adding 5 additional beds at an estimated investment of 55 lakh, enhancing our ability to serve more patients in that region. The second is the launch of a new initiative, Urja Neurocare, a specialized neurocare facility that will focus on integrative treatments for neurological disorders, combining modern diagnostics with Ayurvedic protocols. The estimated cost of the project for this new vertical is going to be about somewhere 1.8 crore. From the patient's perspective, we are witnessing a robust uptake. In this year of FY25, we had about 82,000 new patients in the year. In this first half of FY26, we have already achieved over 60 to 65,000 new patients, and we expect about 1.2 to 1.3 lakh new patients by the year end. Our medium term target is to reach about 2 lakh new patients annually by about FY28, supported by stronger brand awareness, digital engagement, and increased insurance coverage. A key strategic shift has been our move from preventive wellness to disease reversal programs, higher value interventions where average patient billing ranges from 50 to 60,000 annually. This aligns better with our doctors' expertise and the clinical outcomes we are known for, helping us achieve both better patient results and stronger financial returns. Marketing spends have been well managed, around 14 to 15% of revenue, supported by our national brand ambassador, Mr. Sonu Sood, and the new digital campaigns. We are seeing encouraging returns on these initiatives, and we intend to scale them prudently in the next year, FY27. We are also deepening insurance partnerships. Our Khopoli Hospital is now almost very close to get CGHS approval and fully cashless. Nagpur, Visakhapatnam and Vadodara hospitals are expected to complete their empanelment with leading insurers in the next 6 to 7 months. This will significantly expand patient accessibility and improve occupancy, which already stands at 75 to 80% across hospitals. On the manufacturing front, our subsidiaries, Dynamic Remedies Private Limited and UV Ayurved Pharma Private Limited, now produce our proprietary Ayurvedic and nutraceutical products in-house. This ensures product quality, availability, and higher margins, while supporting our growing diet kit and herbal medicine business. We are working on ready-to-cook and ready-to-eat formats of our diet products, enhancing convenience for patients and retail scalability. Now coming to our financial performance, revenue from operations in this first half of FY26 is rupees 49.94 crore as against to 41.80 crore in H1 FY25. Year-on-year increase is 19.48%. This growth has mainly driven by higher patient engagement, improved therapy adoption, and robust growth in wellness product sales. The EBITDA, excluding other income, is rupees 8.62 crores in H1 FY26 as against 5.76 crores in H1 FY25. Year-on-year increase of 49.59%, translating to a healthy EBITDA margin of 17.26%, reflecting operational discipline and better cost optimization. The profit after tax was 4.84 crore in this year H1 FY26 as against to 3.77 crore in H1 FY25 last year. So year-on-year increase has been of 28.26%. The PAT margin was at 9.68% in H1 FY26, which has increased of 66 BPS year-on-year. The basic EPS stood at rupees 4.56 in H1 FY26. For H1 FY26, we continue this momentum with growing patient footfalls, improving bed utilization, and higher average ticket size. We are confident of delivering 20% revenue growth this year and maintaining EBITDA margins above 15% continuously, trending towards 20% by FY28 with PAT margins above 10 to 12%. For FY26, we expect revenue across to cross about 115 to 120 crore, driven by higher hospital utilization and clinic additions. We are targeting an EBITDA margin of around 17 to 18% and PAT near to about 10 to 11% for the full year, improving further as scale and operating leverage play out. By FY28, our total revenue potential stands at about 250 crore, split roughly 50-50 between clinics and hospitals. Our long-term mission of 2028 envisions reaching 5 crore people, operating 1,000 clinics and 10 hospitals, and reaching to maximum number of patients for disease reversal, supported by strong digital and manufacturing capabilities. Our marketing and branding investments of around 7 crore, including Sonu Sood's campaign, are being amortized prudently over 5 years. We will continue to maintain tight working capital control, leverage our integrated manufacturing units for better gross margin, and focus on cash flow generation to fund our growth internally. I would like to emphasize that our focus remains unwavering to deliver clinically proven holistic healthcare while maintaining financial discipline and sustainable growth. Our approach of integrating modern diagnostics with Ayurveda continues to set us apart, and we are confident of scaling this model profitably across India. To summarize, Madhavbagh today stands at an exciting inflection point, financially stronger, operationally more efficient, and strategically positioned to capture the next phase of growth in India's traditional healthcare market. We are confident that our expansion in hospital growth, as well as into the franchise clinics, the digital integration and clinical research leadership will help us create long-term value for our stakeholders. We are confident in our strategy, our people, and our purpose. And we believe the coming periods will continue to reflect the strength of our model and the trust of our patients place in us. Thank you once again for your time and continued support. We are now happy to take your questions.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. The first question is from the line of Mr. Keshav from BHH Security Private Limited. Please go ahead, sir.
Right. Thank you so much for giving me an opportunity to ask my questions. I'll have 2-3 questions, so you need to give me that time. So basically, doctor has outlined that he's going to use the funds for from 150 beds, he's going to make it. So can you just outline your strategy for hospitals in detail? What exactly are you going to do with the hospitals? How is the growth for hospitals looking like? Right now we are having 4 hospitals. We are saying that we are going to use the money for expanded capacity of Khopoli and Nagpur hospitals. What about the rest of the country? Have you identified any hospitals, any places where we could have hospitals? Do you have a strategy wherein you could convert a big clinic into a 10-bed hospital? Can you talk about the hospital space?
Okay. Yes, Keshav. So answering this, the last question I'd like to answer first. Now there are several existing franchise clinics which are interested in converting themselves into a 5 to 10 bedded hospital. Already one of the franchise clinic at Kolhapur has upgraded itself into a 5-bedded hospital, which is very close to get all the insurance approvals also. And few of the insurance companies have also tied up, and cashless as well as reimbursement facility has already begun in that hospital also. And talking about the other hospitals, right now, as you rightly said, we have about 110 beds functional with us as of now. And in the coming 12 to 15 years, we'll be having 100 more beds at our Khopoli hospital.
12 to 15 months.
12 to 15 months.
Yes.
Yes. We will have 100 functional beds extra at Khopoli. That will make us 150 bedded in Khopoli itself. Plus, we'll be planning to have more 80 beds in our Nagpur hospital. So, the Nagpur hospital in total will become about 100 bedded, while the Vadodara hospital, which is about 20-25 bedded right now, that will also be planned to be converted into about 100 bedded hospital in next 12 to 15 months. So in total, if at all we talk about, the Khopoli hospital becomes 150 bedded, plus the Kondhari, that is Nagpur hospital, becomes 100 bedded, plus the Gujarat hospital becomes 100 bedded, and the 20 existing beds at Vizag hospital will stay as it is. We are still searching for much more bigger place at Vizag, but still we calculated as 20. So on an average, that is going to be about 350 to 370 beds that we'll be having in the next 12 to 15 months. Speaking about more hospitals that we are looking out for, yes, we are also trying to expand our hospitals at a few more places. A few more applications have already come in for franchise hospitals from the existing company clinics that the franchise clinics that we have. They are upgrading themselves to a franchise hospital. So the next that is in pipeline is the Surat hospital, which is supposed to get upgraded. And those things are already in place. I am sure that in next 12 to 15 months, we'll be having several more beds along with these beds, which we are confident about.
Okay, got that. Now, sir, can you talk about your plans for listing on main board, because you already completed 3 years in SME board. So plans about listing on main board.
Yes. So we do have plans about going towards the main board. In the next year, I think we should be absolutely ready to go onto the main board. So the plans have been charted out accordingly, and the implementation steps have already begun. So I am absolutely excited about it, so that this target should be possible in the next about 6 to 7 months.
Okay. So 2 more questions. Status of preferential warrants which clutch of institutional investors have, applied for. We have 40 lakh warrants which are going to be issued. So what is the status? Have you got any feelers, any update from NSE as to when they are going to approve it?
Yes, we have got a good amount of queries from the NSE. We don't have still an update till when are they going to approve it, but their queries are being answered by our team. And I am hopeful about it that in next few days we should be able to go through.
Got it, sir. So we have done around 50 crores of turnover for the 6 months. What are you predicting for this year, your sales? And for next year, can you give us some sense? What are you looking at sales for next year and current year? That's all from my end.
Current year, as I mentioned, we'll be planning to reach about 115 to 120 crore in the current year. That is what we have kept a target for ourselves. So that is how we are planning our steps. And in the next year, again, we'll be growing more than 20% of the existing year, and with a steady increase in the total EBITDA margins also.
Okay.
So that's the plan.
So can you just give us some semblance of what kind of EBITDA margins we could look at for 26-27?
So that would be steadily increasing. It would be more than what it is right now. We are planning and hoping to increase the EBITDA margins to a good level, and I'm sure I should be able to do that in the recent future.
Okay. Thank you so much, sir. That's all from my end. Thank you so much.
Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Chirag Shah from White Pine Investment Management. Please go ahead, sir.
Hi, thanks for this opportunity. Hello, I hope I'm audible.
Yes, Chirag.
Yes, sir.
Yes.
Yeah, hi. Thanks for this opportunity. Sir, 2-3 questions. Just an update. I just missed the CAPEX plan that you indicated there, bed addition, and how much money you would be deploying in that. And how much money has come on this warrants that have been issued? I presume 25% would have come, right?
Okay. So, Chirag, I'd like to answer this. Yet the NAC approval is pending. So once we have the NAC approval, we will get the 25% coming in our company. Till now, we haven't received it as the NAC approval is still pending. So that is the status of the warrants. About the capex, the things are already in place and we have already started implementing. Today was the day when it was the first brick to be laid for the Khopoli Hospital, 100 beds extra that we were supposed to start. So today was the day when that puja was conducted. And from today and tomorrow, we will be starting with the whole construction for the Khopoli Hospital itself. So about the capex, as you asked, for the Khopoli Hospital, we are building 100 extra beds. And for in the next 3-4 months, we will also be beginning the same for the Nagpur Hospital also. So on an average, if at all we see, the cost of construction, we are planning to have about more 50,000 square feet in Khopoli Hospital and somewhere about 25,000 to 35,000 of square feet at the Nagpur Hospital. So on an average, it would be about 25 to 30 odd crore as a total investment that will be going into these two hospitals. While for the Vadodara Hospital, we will not be investing anything because that is on a rental model. And the installation cost obviously would be there at the Vadodara Hospital. But the construction cost will not be there for the Vadodara Hospital as it's going to be on a rental model.
Okay. And Baroda, how much you indicated and with that, how much expansion you indicated?
As of now, it is about 20 beds and more 80 beds can be constructed on the first floor. Right now, we have been occupying only the ground floor.
Okay. So in F28, we'll have 350 beds operational, right, for full year?
Yes.
Because F27, I think the Khopoli and Nagpur would get ready somewhere in F27.
Yes.
Financial year 27. How much time it will take for you to keep Khopoli to get ready?
The estimated time is about 12 to 15 months.
12 to 15 months, right? Okay. So even if, okay, so at least in H to F28, all the beds would be available for utilization, right? That's how one should look at it.
Right.
Correct? So Nagpur, Baroda, Khopoli, everything would be available.
Yes.
Okay. And generally, how much time does it take for you to ramp it up? Because you have to market, advertise. And
3.5-4 years, we should be reaching to that level.
Ideally, 3.5-4 years for optimal utilization.
Yes.
And that would be what? 70%, 80%, 60%?
More than 70%.
More than 70% optimal. Okay. And as of date, you have 110 beds fully operational, correct?
Yes.
And second question is, any thought on what kind of manpower you would need to hire? Because one is creating physical capacity and then the human capacity also. So, you can say what kind of people, how much people you will need to hire for this? Because it's a reasonable expansion that you are doing.
Yes. Yeah. So once we start with the Khopoli Hospital, all 100 beds, we will need a manpower of more 150 to 160 class 2 and class 3 officers and about 5 to 10 class 1 officers who will be doctors. So that is already on the paper. So the hiring will begin once we are very close to get these beds operational. But those things would be very well taken care of while planning their beta.
Okay. And you indicated that you want to reach to 20% kind of EBITDA margin by end F28. If I heard correctly, was it the right?
Yes, you heard it rightly.
Okay. Thank you and all the best.
Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Darshil Zaveri from Crown Capital. Please go ahead.
Hi. Good afternoon, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. Sir, you've given a very clear-cut guidance. So just wanted to know, we've generally in the last few, half years, we've been around 50 crores of revenue. So what makes us, what is the growth driver that, we'll be able to, clock in nearly 65, 70 crores of revenue in this half year? So what will be the growth driver for that, sir?
Okay. So, Darshil, the growth driver is going to be the new patient footfall that we are going to drive inside the clinic. So, now we have come up with typical plans for driving the patients inside the clinics. So, that has not been a challenge now as that was in the past, but now we are confident about getting it very fluent and very easy for the new patients coming in. So if you must be aware about the whole metrics, per new patient entry inside the organization drive somewhere about 6,000 to 7,000 of revenue per new patient entry. So that is how the revenue will be planned accordingly on the basis of the new patient footfall coming inside.
Okay, but I think by our clinics and everything, we are already at a good occupancy. So with the current 110 beds, we will be able to service them, or it's more on the clinic side, sir?
Yeah, majorly it's going to be on the clinic side. The clinics are utilized about 45 to 55% only. So we have a huge scope in over there. And majorly the franchise clinics, 85 to 90% franchise clinics that we have, driving more new patient footfall to these franchise clinics as well as company clinics and the hospitals is going to be the major growth driver.
Okay. And sir, when we say that for new patient we'll earn 6,000 to 7,000, that's for the full year, or how long do we, what's the time period for this?
If at all you talk about the enterprise level, as you must be knowing, it's about 40% of the franchise revenue that comes to the company. So on a whole, if at all you see 14,000 to 15,000 rupees is what every new patient gives to the patient, considering the enrollment ratio also. So the total average comes to our, when we calculate about 40% of that comes to us. So that is about 6,000 to 7,000 rupees is what comes down to the company from this franchise revenue. So when I am talking about this, it is fairly clear that when a new patient comes inside the clinic, about 30% patients get enrolled in the whole year-long care plans. And this revenue then gets apportioned for the whole year as such. So that's about 6,000 to 7,000 rupees per patient per year. That comes down to the company as a revenue.
Okay. So I think, sir, we mentioned around 82,000 new patients came in H1, right? If I have heard that correctly. So on an average, if you're going to get 6,000, so that itself will add around 50 crores of our revenue. Is that a fair understanding on my part, sir?
No. So we will be driving more number of new patients inside the clinics in these 6 months. So that is going to add to the complete revenue that I just mentioned about. So we are planning, as of now, we are somewhere about 12,000 new patients per month to the clinics and the hospitals. So we are planning to now gear up towards about 15,000 plus new patients every month to the clinics and the hospitals. So this increase in the total number of new patients driven inside the clinics and the hospital is going to add up to this revenue.
No, I understood that part, sir. I think when we were discussing our matrices, we were seeing that I think around 80,000 new patients were, catered to in H1. So if I do 80,000 into 6,000 rupees, that's roughly 48, I think, crores, right, sir?
You can say.
So that's what I meant. Like, it's from the new patients itself that we have, enrolled in the, H1. By next year H1, we should be able to generate 50 crores of revenue from them. Is that a fair understanding?
Yes.
Yeah. Okay. That helps a lot, sir. I just wanted to know, like, in terms of our, the places, basically we are developing a market on our own, like, so, there are some other players who are offering these services. So how do we distinguish ourselves, or is that they are also complementary as more knowledge about these treatments spread, more, people will start coming in? How do we see that competitive landscape, sir, right now?
Okay. We have a clear distinguished area where we do work in disease reversal process. As I just mentioned few minutes back in my speech, about 65 to 70% of patients who actually join us with for the year-long disease reversal process, 65 to 70% of patients reverse from their actual disease. And reversal definition is like shutting down of their allopathic medications plus getting their reports back towards normal with living a symptom-free life. So this is the definition of being disease-free. So all those patients who join up with us for the year-long program, 65 to 70% of patients actually get disease-free, and this is the unique selling proposition of our organization. So that is how we stand out. We have a very strong patient adherence program in which once the patient joins up, about 85% of patients stay with us for the whole year. So that is how we are strong in our adherence as well as the clinical protocols.
Oh, okay, fair enough. So just one last question from my end, sir. So are we looking to, launch any, products, that can be targeted to the masses, or, like, example, just like saying that people are having a lot of protein powders, so any kind of nutritional products, we are thinking of going in those lines, or we'll be more towards the clinic and, serving our patients. So just, are we developing a product strategy, because that's also a market that I feel we can address, sir?
Yes, Darshit. We already have a product called as Madhav Prash, which is out in the market. We sell it online. We have our presence in various different online shopping markets like Amazon, as well as we have ourselves on various quick commerce platforms also, wherein the patients can buy Madhav Prash themselves. So as of now, every month we sell somewhere about 15 to 20,000 Madhav Prash every month. And soon we are planning to scale it up in next about 24 months. We plan to scale it to about 1 lakh of Madhav Prash every month. So that is how we are planning in the future. Plus, we are also planning to have a few more products along with Madhav Prash, which would be sold online. They would include many of these food products that we already have, as you rightly said, protein. But that would not be only protein, but that would be a food which will be much more stronger in the protein content in itself. But it is going to be a usual food that the patient usually has, but it will have some Ayurvedic value. So those things are in pipeline. You will see that happening in next 4 to 6 months.
Okay. So, sir, in this Madhav Prash, what is our, unit economic, like what's the gross margin that we earn, and what's the ASP, sir?
So, as of now, we have just become cash positive in Madhav Prash sales across the online platforms. And in the coming, say, about 6 to 8 months, we should be absolutely positive on the EBITDA part also while we go ahead. So 1 month we had been positive, but till now it was sold to a higher level. But now in the future, I think in next 3 to 4 months, we should be absolutely positive when we have this Madhavprash sold online also.
Oh, okay. Fair enough. That's it from my side. Thank you so much for answering all my questions. All the best, sir.
Thank you. The next question is from the line of Mr. Henil Bagadia from Equicorp Associates Advocates and Solicitors. Please go ahead, sir.
Thank you for the opportunity. So I've got some questions related to your expansion in Malaysia with Maxira. So if you could give some more clarity on what kind of beds are you targeting there, what could be the possible revenues, what could be, so if it's 60,000-70,000 for India per patient, it's definitely going to be a little more for Malaysia. So what kind of average pricing that you are seeing there for patients? And also, is that also going to be a point for where you can actually attract patients from there to India for probably more treatments or probably more complex treatments? So how is it going to work? If you could just spend some time.
Yes. So, Henil, right now that MOU, what we have done with the Malaysia company, that is a university, that's a Lincoln University of Malaysia, which we have collaborated with. So this is going to be an actual dipstick method that we are trying out for. So over here, we are helping them to set up the Panchakarma Center, the treatment center with our clinical protocols. So in this case, initially, first few months, we'll be helping them to set up the whole clinical protocols as well as the training of the staff. And this will later on, if this goes according to the plans, we will be able to convert this into a chain of clinics in over there. So that is the plan over in Malaysia. As of now, the complete figures have not been completed with the working on the Excel sheet, because majorly we don't have any investment to be done in Malaysia. The investment is going to be from their side. So we are just supposed to be the partners, and we'll be training as well as giving our clinical protocols. In return, we'll be getting 30% of the total share that is going to be generated. So that is one. Second, about having those patients coming in over there, yes. Talking about the medical tourism, we have now started talking to various different tourist kind of agencies, where we have also started receiving patients from the African countries as well as GCC countries. And Malaysia also, that's the plan, that we'll be able to attract and refer those patients from there to here. So that is how we are planning for. Obviously, yes, when the patients, when they come down over here, where we have 60 to 70,000, 50 to 60,000 rupees in the clinics and about 80,000 to 1 lakh rupees in the hospitals, that is the patients which get referred from there. Obviously, they'll be paying 20% more of what we usually charge the Indians.
Okay. Sir, and since you said that you are actually ramping up the capacity for Madhavprash, so since we are selling about 15,000-20,000 packets per month, was that the capacity constraint and we had more demand, or was it that we were seeing early shoots for, the demand rising?
I didn't understand your question, Hanil.
So we are selling about 15,000-20,000 packs of Madhavprash, and we plan to go to capacity of 1 lakh.
Right.
So in the current sale that's happening, as you said, you want to actually ramp up the utilization. Is that are we seeing more demand and we have supply constraints where we actually not able to expand the capacity? And how would your sales actually work? Because 15,000-20,000 to 1 lakh pack, there is a big delta. So it will slowly ramp up in terms of your sales per month.
Right.
So if you could just give some kind of figures based on your demand, based on your analysis of how you see that sales actually happening.
Yes. As of now, if we see, about 45% odd are the repeat purchase. So that is how, which shows that the demand is quite good. And as we go ahead, we are slowly and gradually scaling up ourselves. We can even accelerate ourselves, but we have planned to go a bit slow till the next 4-5 months. Later on, we can accelerate ourselves to a good speed. So both the ways, the manufacturing of this Madhavprash, also we have planned to get a complete fully automatic machine which will manufacture this Madhavprash end to end. So that also will help us to scale up faster. So as of now, we have planned the speed of the sales, and that has been implemented as what we had planned for. So I'm absolutely happy with the progress. As you said, in the coming months, we'll be able to accelerate, and I don't think so there are any constraints as such to accelerate now also, but I'll be a bit slow when we start ahead. In the next few months, we'll be accelerating.
So also on the hospital side, when customers come for treatment, I mean, you actually say disease-free and disease reversal, but actually they actually go back to the normal lifestyle. In a lot of cases, actually the disease does come back. So we actually had initial plans to actually make it a part of a care plan product where we can actually sell some consumables along with your existing care plan items which is there. So Madhav Prash was actually going to be one of the segment where we would actually sell food kit or some kind of medication so that the disease actually doesn't come back, and this was also going to be a part of the revenue vertical. So I don't think that's actually picked up in a very significant way, given we have got 82,000 customer additions. We are focusing for probably more than 1 lakh and 2 lakh on a medium to long term basis. So where is the disconnect there? Why isn't that actually picking up?
No, it is not so. Our food packet, which is called as diet kits, one of the food packet which is called as reverse diet kit already has Madhav Prash into it, as well as these food products which we usually give through our diet kits. They have been accepted well by the masses, but being a therapeutic approach, they have various different eligibility criteria when we hand it over to the patient. These are not the normal food things that everybody can consume. These are disease reversal diet kits, but at the same time, as you mentioned, we are also coming up with several other food items which will be consumed by general population. So a few minutes back, I think Darshil had asked that question. So again, the same thing, we will be coming up with several other food items which will help us currently, wherein these would be food products like the breakfast food items, which will be having several typical protein content as well as low carb and antioxidants. There are several plans which we will be seeing in next 4 to 6 months happening.
So, and lastly, if you could also give the current figure, how much of our current sales for these particular products actually comes from the modern trade, which is e-com and Q-com, how much through the clinics and how much through the Ayurvedic centers which probably buy products from you?
Okay. 15 to 20,000 of these products, whatever I just mentioned, is all from the online platform. Addition to that, clinic sells about 6 to 7,000 Madhav Prash every month. That is second. Out of this, if at all you talk about Q-commerce, Q-commerce is about hardly 10% as of now, which will be gradually ramping up because that will be on the basis of the demand of that product from smaller suburbs. So that will take some time. But as a whole, Q-commerce is about 10%, while rest of this is from our website as well as from platforms like Amazon.
Okay. So, and lastly, if I could just squeeze one more question. So since you have an ambition to reach about 10 hospitals and right now we are at 4, so the 6 hospitals that you actually plan, is it going to be in a new geography or is it going to be in our extremely important states like Gujarat or Maharashtra or Madhya Pradesh where we are actually very strong?
You are almost right. These would be majorly concentrating into these geographies as well as few additional geographies. But you are almost right that yes, we are planning it accordingly. So Gujarat as well as Maharashtra has huge amount of potential, as well as we'll be planning it for some other states like Rajasthan also. And that is how the discussions are already going on with.
And in these hospitals, since you are also planning to attract overseas customers who definitely have a little higher purchasing power, as seen from the traditional hospitals also, from their, earnings. So do you plan to have a hospital which is more on the luxury kind or kind of a luxury resort kind model, where probably customers can pay 20,000 for, about 80,000-90,000 on a package basis or probably upwards of 1 lakh also?
So you are absolutely right. As of now, Khopoli Hospital also, we charge more than about 1 lakh also for a week. That has already began. As we are gradually improving the infrastructure at Khopoli Hospital. So I am sure that that will be happening recent future. that we'll be able to charge more also. But at the same time, I am not planning for any kind of luxury kind of hospitals for disease reversal. But we have a discussion going on with a hotel chain, which we are planning to have a wellness kind of Panchakarma center in their hospital. Yes. So that is what
because
we are
there is
planning
one
for.
in Nashik which charges about 40,000-50,000 a day, and it is, I mean, they've got a very good model. So that is the kind of purchasing power a lot of people do have.
Right. So I think in next few years, once we ramp up for our Kopoji hospital, we should be able to do that too.
Okay. Thanks a lot for the answer, sir, and best of luck.
Thank you. The last question for this session is from the line of Mr. Raj from Arjav Partners. Please go ahead.
Hello. Am I audible?
Yes.
Yes.
Okay, sir, as per the plan laid by you for next 3-4 years, I did some rough calculations. So for FY26, you said you'll be doing 115 to 120 crore sales, right?
Mm-hmm.
And sir, for year after that, that is FY27, you should be doing around 180 crores of sales. Is my figure rough, right?
Yes.
And out of that 180 crores, how much would be coming from clinics and how much would be coming from the hospital?
Okay. So as per my calculation, what I'm thinking right now, for the hospitals, it would be somewhere about 50 to 55 crore. While about 125 to 135 should be from
clinics.
Clinics.
And sir,
But
a year, yes, go on.
Okay,
Yes,
I'll finish. I see that much more than what I see over here, because whatever plans have already started getting implementation steps. So I see that can be surpassed. So let's keep our fingers crossed.
Surpass the 180 crore figure. Okay.
Yes.
And sir, and a year after that, that is FY28, you could be doing roughly close to 320 to 350 crores of sales.
Yes, 280 is what the plan was, but yes, I think that should surpass, but yes, should happen.
And sir, in FY28, what would be your breakup of sales and what would be your EBITDA?
I'll not speak the number as such directly, but I am sure about it that whatever EBITDA we are having as of now, that can go beyond what it is right now easily. So I have no major challenges for growing the EBITDA as such. So it can surpass what it is more than say about 1.5 times or maybe twice also.
Okay. Actually, sorry, 1.5 to twice means I didn't understand.
Batata. If at all we reach to about 280 crore of turnover, the overall EBITDA has a potential to go beyond 30 to 35% also.
30-35%. Beyond 282. If you reach 280 crores mark, around 280 crores, 30-35% EBITDA. All right, yeah. All right, sir. Okay. Thank you. All the best.
Okay.
Thank you.
Thank you.
I would now like to hand over the conference to Dr. Rohit Madhav Sane. Sir, please go ahead for the closing comments.
Okay. Thank you. So I would like to thank you all for taking the time out and attending this call. I am also thankful to each member of Madhavbag family, as well as our clients, our patients, the banks, investors, the financial institutions, and all other stakeholders. So for any other queries or information, please get in touch with our investor relations team, the Adfactors team. Thank you very much.
Thank you so much, sir. On behalf of Vaidya Sane Ayurved Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.